Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, May 23rd, 2025. S&P 500 currently sitting at 5,777. I'm David Zarling. I'm here with finder of vacation food, Ian McMillan. You've got a trip coming up.
Can't be hiding the vacation food from me.
Yeah,
I know we're supposed to wait, but some good stuff in there.
I know. Vacation snacks, man. They're the best.
5-year-old's definitely not going to wait. Not our 5-year-old. He can spot fruit snacks.
Fruit snacks, those are great.
And if you're going to hide them, you got to hide them like it's a Christmas present.
Mm-hmm. In our house, you know it's about to be vacation time when all of a sudden the puppy chow shows up or the peanut M&Ms. And I think it's a universal truth it's a universal truth that I think most wives who prepare for vacation find ways to stash the vacation food.
I had to promise that I would replenish one of the cookie boxes.
How would you wait? Like, how does that work? You just go buy another one?
Yeah, I convinced her to let us have one cookie box for this week, and that I would go to the store and buy a new one before we left on Sunday.
That's fair. I think it's a fair.
Yeah.
I'm sure your son Connor was just sitting there wide-eyed, watching Dad negotiate the deal of his lifetime.
Part of the deal.
Part of the deal. Well, okay, so part of the deal, did you go high? Like, I want the fruit snacks, the cookies. I want all of that.
I think at first you have to act just flabbergasted that you're not allowed to any of it. And then you start backing down. Like, okay, well, at least let us have one box of cookies.
I love it. It's the art of the deal. It kind of feels like tariffs that went from 125% to 10%.
Yeah. And I guess, I don't know, another tariff headline this morning. Back to the 200-day, that 57.90-ish, 50, wherever we are, 57.70.
Yeah.
57.77. Yeah.
So right at the 200-day on the S&P 500. Dow Jones is below a 200-day. The Qs are above a 200-day, well above. IWM never got back above its 200-day.
Never got there. Terrible index. Really didn't even get that close. Got back up to its, it was kind of late March highs before the Liberation Day excitement. Although IWM holds 198. We could have some type of, and I don't like the silly names they give, patterns, but potentially some type of head and shoulders action around 198.
Yeah.
On IWM.
Yeah, like an inverse head and shoulders.
Yeah, an inverse head and shoulders, which that's fine. Probably was going to be, it was the least well-behaved index going into this. Least well-behaved, it seems like, coming out. Dow, though, also kind of a bummer.
But it also has that inverse potential.
It does.
And I find it interesting that IWM did respond to its volume-weighted average price from the all-time high. All the other ones are above. Now, we'll see. And I should be clear when I say all the other ones, the NASDAQ, the S&P. I'll have to double check on the Dow here, but it's notable that small caps continue to be weak.
Terrible. Oh my gosh. But Europe
holding up okay.
Yeah, pretty good on an absolute basis, I would say. Maybe losing a little steam on a relative basis. That's probably to be expected. What about, is Bitcoin considered a hard asset?
It's on a hard drive somewhere.
Somewhere. Someone's
mining it. Yeah, someone's server. So it's hard and soft.
Bitcoin holding up well. Got to new all-time highs this week. Still kind of not a lot of, I'd still say the crypto breath is And there's not a lot of smaller crypto coins where you're saying, oh gosh, I wish I was in this. Maybe for the super tiny ones. But like your mid cap cryptos, I don't even know if that's a thing. Are there like mid cap cryptos, small cap cryptos?
Well, I think, that there's a lot of people in the crypto industry that do use market cap as a thing.
They do. It's a very big thing. You see that quoted a lot.
You've got Bitcoin, the biggest boy out there. I mean, that's what, 2 trillion market
but like a
cap,
Solana or like a Litecoin. Like I don't want to own those over Bitcoin.
right? Yeah, basically your top 9 are over, each of them are above $1 billion market cap. So, it's let me say that again. I'm completely incorrect. Your top 10 are above 25 billion.
Okay.
And then you go, and that's Tron. Tron is your bottom of that tier. And then the next highest, SUI, is 12 billion.
So Tron would be considered a large cap.
I think so. I think when we're
And it
looking
has
at
hold up well. If I had to own one other than Bitcoin, I mean, we've talked a lot about that in the crypto workbook.
right. Yeah, there seems to be so your top 10 are 25 billion and higher. And then I would say like 2 billion to 12 billion is 11 through 52. And then you drop below 2 billion. And there's a bunch that are around 1 billion down to like 78. But your point is some of these larger cap ones holding up very well. And Bitcoin's, I mean, sheesh, Bitcoin is 2 trillion and the next largest is Ethereum at 311 billion. It's quite a difference.
And still no like I still don't know what you do. Like, what do you do with Tron?
I don't know, but the chart looks nice.
Does look nice, but truly just an asset that people buy and sell.
Okay, so Tron with the quick keystroke of my fingers helps create and deploy applications such as smart contracts with a focus on content creation and distribution.
Okay, smart contracts.
Yeah, which I mean, that's one of the most stronger utilitarian needs out there would be contracts.
I could have sold my house with some Tron.
Yeah, I think that's coming, right? I think there's going to be a day where we're buying and selling houses, cars using blockchain technology or tokenization. That's probably coming.
Need that.
I don't know when.
I lost the title to my car when I tried to sell it last year. Had to order a new one. $100. Could have just put it out there on the cloud.
Yep, on the chain. But yeah, I think Bitcoin holding up. It's currently sitting at 109,000, still above its highs near at 106,000 from 24 and 25, and on a relative basis, going out at new highs versus
very, very strong on a relative basis.
So pretty hard to ignore the strength out of Bitcoin.
And that's one of those things, right? If you think stocks go higher over the coming year, right? And that's a lot of the data we get out of these bottoming. I mean, you can't say that it's the bottom yet because we haven't put in a new all-time high and moved forward. But a lot of these, the data that comes out, right? Oh, well, when this happens in the S&P or this thrust, we get, 4 days in a row with X, then, looking out 6 months, 12 months, a lot of that data gets thrown around. It's obviously very, very bullish. So if, we keep that in the back of our mind, say, okay, and, there's days like today where stocks get hit hard. But if we think that if we believe that stocks are going higher over the next 6 to 12 months, or at least the history says that there's a pretty good chance they'll be higher, and Bitcoin's outperforming that.
Yeah,
I think it bodes well for both assets.
I think it's fair to say it's happening with little fanfare, and what I mean by that is I'm not getting a lot of anecdotal inputs personally. both as someone who helps clients and as a family member. I haven't received any texts or emails about, well, look at what Bitcoin's doing. So we're breaking to new highs, and grandma's not messaging me about Bitcoin. I think that's interesting. But maybe it's telling.
I would say so for sure. And
But
you
maybe-
don't like I said before, a lot of these, we'll call them mid-cap coins, aren't going bonkers. A lot of them are below their own 200 days. Yeah, I would say like the crypto hype machine, definitely not to the degrees we've seen in the past.
Right. People aren't out there going, oh, look at fart coin. Look at, just not seeing it.
How is Fartcoin doing?
What is also interesting is we're starting this podcast with this, that we're starting with crypto. Could be information there.
Could be. What else is holding up?
Fartcoin has 1.5 billion in it.
Small cap.
Yep, small cap.
Probably in the Russell 2000.
It seems like it, because Russell 2000 is
Russell
just
2000 looks like a Fartcoin.
Yeah, Russell 2000 will eventually be somebody. But man, for context, and maybe, for those who don't look at charts a lot, for people listening,
I don't know.
This thing has a negative return since November of 2021. That's
Maybe
5 years. That's 5 years
he's
of
a
nothing.
Child you just give up on.
No, never give up on a child.
Oh, yeah, and that's Russell. He's our special child.
Yeah, maybe Russell just needs some vacation snacks.
Needs something.
Get it back together. But yeah, crypto holding up well. Not so much, if you're going to have a portfolio allocation, you want to have Bitcoin over small caps at this point. And you brought up international, whether it's VEU, international minus US stocks, or Europe, or some of those things, still in a downward rate of trend, but holding up well on an absolute basis. So it'll be interesting the coming weeks. And in 2020, when we came out of the COVID low, I believe it was around June of that year. So June is upon us here shortly. We got above a 200-day, and then we tested that 200-day from the top side several times before moving higher. And
we did.
Is that what we're going to see this time around? Is that we're going to test the 200-day from the top side several times before moving higher? That'd be pretty logical after a pretty strong move off the bottom and recording.
Yeah, this is the part that's annoying, is that, right, as a technician, that the healthiest path forward is sideways for a little bit.
Yeah, some digesting of the move.
Yeah, some type of contraction. Obviously, we give back a little bit, but for the most part, we move sideways. But yeah, of course, it always happens dramatically. It never happens in the way you want. But I think testing the 200-day would be healthy. I think it puts a nice line in the sand. And, dips have continued to be bought, so we'll see if that changes. We've lost, and Shane Murphy did a good job pointing this out this week. Lost, and you might have mentioned this earlier, lost the rate of trend from the lows, right? Kind of a V-bottomy recovery we've had. I wouldn't say as harsh as 28, end of 2018, 2019.
Or even the COVID low.
Yeah. But yeah, I think, in the grand scheme of things, you probably call it a V-bottom. So we'll see.
Well, and there's some data out there. Subu Trade put out information about how 24% of stocks in the NASDAQ 100 got overbought above using an RSI, so greater than 70.
Yeah.
And typically that leads to a 1 week pullback.
I did see that. That's right.
So on one hand, you got a Zwig breath thrust. You've cleared a 200-day. On the other hand, that move was so fast that it makes sense to see some cooling off in stocks. Now, if we can't hold the 200-day, that's also information. Like if we can't stay above it and sustain trade above it, because for whatever reason, this election gap level is important, because today's gap down is through that level.
You're right.
So there is something to be said for making sure that we can get above the election gap level, which is from about 57.80, 59.80. So this 100-point level on the S&P 500 is interesting. Will be interesting to watch to see if we can reclaim it. But it would absolutely make sense that we consolidate here for the next few weeks before moving higher. I mean, because in the end, you do have to chew through supply. The people that bought, October, November, December, and January are still sitting there, and they're back to even. And that's that old psychology.
Yeah.
If I'm
There's
back
a lot
to
of
even,
people that are saying, "Oh, well, this was a gift. Now I can get out."
right? And so we have to chew through that. And that's the beauty of studying supply and demand is the math doesn't lie. And in order to move higher, it has to chew through this potential supply through the psychological level of where people have gotten back to even. And if there's enough demand in this market or lack of supply, that will happen. We'll move on to 6,200 if that's the case. But right now, I could see an environment going forward here for a month or two where we're consolidating and trying to hold on to a 200-day and then moving higher. And if we don't, if we move back lower, that's information too.
Losing the election gap. I think you mentioned earlier being at zero line for the year.
We got up to just back to break even on the year. Also a psychological level.
200-day. We mentioned the 200-day earlier. I mean, there's a lot of things here. I do kind of like that they've all, there's kind of like a confluence of big levels. We've gotten through them. Now we are retesting them from the top side, which is fair, not always fun, but it's logical. Yeah, we will see if these hold. Like you said, a lot of information if we don't. And we're basically back to where we were 2 Fridays ago on the 9th when we were below all these levels. So maybe we're just up here to hang out for a couple weeks, like April 2022. March 2022.
Yep. And momentum factor still holding up.
Yes.
It'll be interesting to see if we have a false breakout on our hands with SPMO, the S&P Momentum Fund. Doesn't have to happen, but momentum has held up through all of this, which is a risk on type characteristic. So what sectors and sub-industries are you paying attention to or are working, not working? What are you seeing out there?
Definitely more growth. I mean, tech has had a nice rebound during this rally. Mentioned momentum. Talked about aerospace on the podcast for a while. Things, Mag 7, quantum computing, some online retail stuff. Gold. I mean, gold got hit for a little bit, making a nice relative comeback this week.
Yeah, gold is digesting very well the move that it's had for over the past year. You can correct through price and time, typically the easier of the two being through time. And right now gold appears to be correcting through time. And that's a really positive characteristic for the metal for sure. How about things that are not working, things that are weak?
Healthcare,
real
estate, which is fine. I'm okay with those falling apart. Utilities, healthcare is just... one thing never recovered during any of this, a relationship that's just silver versus gold.
Yeah, agreed.
Never got really the high beta silver trade along with this uptrend in gold. I'm sure there's fundamental explanation for that, but I don't need to know it. I just know that silver hasn't traded along with it.
Agreed. And gold miners have pulled back in. I would say materials also a very weak sector. Healthcare, real estate, utilities, materials, all very, very weak. And that's okay. We don't have to hold those. They don't have to be in a portfolio. We can use our ratio analysis to identify where to be and where not to be.
Industrial's not terrible. New relative highs.
Yeah. I mean, that's pretty impressive. You said new relative highs for industrials?
Yeah, XLI.
Huh. That is pretty good.
Got on last Friday. I mean, yeah. It's been holding up well. Not a lot of talk over that.
Well, what's interesting is when you look at sector rotation as a whole between the 11 sectors, it's near market bottoms where technology and cyclicals and industrials do well. It's near the end of a move that basic materials and healthcare do well. So what we're just naming now speaks more to a market type bottom than it does towards the top. We'll see. Time will tell. What else are you seeing out there?
I'd say a lot, as we mentioned this last week, I'd say a lot of the leaders from before the correction have emerged as leaders after. A lot of those were first to get back to new highs, like a Palantir.
Sure.
Some new stuff out there. ETF was back in equities this week. So some overlap. I'd say like 18-ish of the names that we held before going to crash in March. 18 of those 25 are back in the portfolio, but some new ones for sure.
I think that's a great time to highlight the Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. So we covered crypto, covered domestic, broad, some sectors that are working, not working, pieces within the ETF that back in equities, momentum factors doing well. What about rates? What about bonds?
Rates. New highs this week for the 30-year. Coming back in a little bit today, but we are back to, new year-to-date highs. We're back to where we were October 2023, so around 5.1 on the 30-year.
Okay.
So we'll see, right? You get through that, you really start, I don't know, probably see another wave, impacts on things that are rate sensitive. We had the big push, really off the lows, you could say since COVID up through the end of 2023. And really, I'd say 2022, 2023 kind of hung out for 18 months up here. Hasn't been as squeamish, right? There's a lot of hand-wringing over rates, but in context, we are where we were 18 months ago. But do we see all that pain from 2022, 2023 come back? Possibility. We are not going lower.
And you highlighted earlier this
currently,
week.
I'm not saying that we're not ever, but if there's one thing we've hammered, I feel like for 2 years on this podcast and client letters. I talk about it every month in client letters. Don't expect rates to roll over.
We're in a new 35, 40-year cycle in rates. It's actually great and a blessing that they moved sideways for 18 months, but we can't assume that we're going to go back to zero anytime soon. And one thing I'd like to highlight that you highlighted earlier this week was just trade weighted dollar back below 101.
Back below 101, yeah.
So it's out of the range again. And so the likelihood of the dollar retreating even further is here.
So your everything denominated in dollars will get a little tailwind.
Yep.
Not saying that fixes everything, but it is tailwind. Obviously, your golds, your Bitcoins, right? If it sits in the denominator position.
And oil's still sitting below 64, 65. So dollar's still below 101. Oil still below 64, 65.
Cheap gas heading into the Memorial Day weekend.
Memorial Day weekend, great 3-day weekend. Rightfully so. Great time to pause and remember those who gave their life, right? Bible tells us greater love has no one than this, to lay down one's life for one's friends. And we have plenty of people to thank in this great country whose family has lost a family member who served so that we could be free. So we encourage all of our listeners to remember that this weekend. That's why there is a 3-day weekend, is to remember those who lost their life protecting us and giving us freedom. The old saying, freedom ain't free. It's absolutely true. So thank you to all those families out there that have that have service members, but even more so that have lost service members on behalf of our country. Pretty amazing. That's love. Great stuff. And Ian, I know you've got a week off next week, which is great. Enjoy it with the kids. Then it's free game. Vacation snacks are free game.
They are.
They are released. No longer an embargo on the vacation snacks. And I hope you have amazing weather, amazing relaxation. Everyone listening, we hope you have a great Memorial Day weekend. Give us a high ranking on your platform of choice and share this with your friends as a compliment to us. We really appreciate it.
Have a great weekend, everyone.